Good afternoon, everyone. Today is April 19th, 2025. I'm Stephen Herwire, owner of Herwire Financial Plans and Direction. Today, after the market wrap, we're going to talk about filing taxes first year after divorce. But first, the market wrap. Okay, a divorce is certain to cause a change in your filing status. Whatever your marital status on December 31 determines your tax filing status for that year. If the divorce is final before the end of the year, the IRS considers you unmarried for the entire year. Therefore, it's required to file either as single or head of household. Single status may be appropriate for taxpayers not qualifying for other filing status. Head of household status typically allows for a higher standard deduction and lower tax rates than the single filing status. One may qualify for the status by maintaining a household for a child, dependent parent, or other qualifying relative for more than half the year, and being unmarried or considered unmarried at the end of the year. Under the Tax Cuts and Jobs Act, various personal and dependent exemptions have been eliminated from the tax code until 2025. However, you can claim the child tax credit as the custodial parent. The custodial parent is generally the one with whom the child spends more than half the year. The Tax Cuts and Jobs Act also increased the standard deduction. For this tax year, visit with financial and tax professionals to determine which itemized deductions may be available to you depending on your situation. And keep in mind, given the current political climate, that the Tax Cuts and Jobs Act may be extended. Alimony. Alimony paid and received affects tax filings after divorce. The Tax Cuts and Jobs Act made some significant changes in the tax treatment of alimony. If your divorce agreement was finalized after December 31st, 2018, alimony payments are not deductible by whoever's paying them and not taxable to the recipient. In divorce agreements before this date, the payer can deduct alimony payments considered income to the recipient. Make sure to understand how these rules apply in your situation. Property settlements. Taxes also come into play with property settlements in a divorce. Usually, there's no gain or loss to report on your tax return from transferring property between spouses during a divorce. However, capital gains tax might apply if property received in a divorce settlement is sold. Filing taxes after divorce can be complex as many factors come into play. It's advisable to seek professional help. Consult with a tax advisor or a CPA specializing in divorce taxes. If you're working through the divorce process, consider engaging a financial professional specializing in divorce. They can help anticipate the long-term effects of different divorce settlement options while maximizing eligible deductions and tax benefits. Couple things to remember if you're divorced. If you're married for at least 10 years, you may be able to claim off of your ex-spouse's record for Social Security purposes. Have your wills, power of attorney, healthcare proxies, and trust evaluated by an attorney to ensure they still line up with your wishes and situation. Keep in mind, you'll also need to ensure that if you have life insurance policies, retirement accounts, annuities, anything that has a beneficiary designation, you need to make sure they're in accordance with the court orders and your wishes. Many folks think that changing the will is sufficient to accomplish all that, but I'm here to tell you the beneficiary designations will ignore whatever's in the will for the most part. Rules change frequently, and a good financial planner will be up to date on these changes. Nothing else, the numbers may change from year to year, and a good financial planner will think of things that laymen will not. And they will inform you of your choices that you have and the consequences of the choices you make. Once you graduate, be it from welding school, engineering school, or law school, you're going to need a different plan for each of these stages that's tailored to your individual situation. During your working years, most important question is, am I saving enough and is it in the right place? Glide path to retirement, which I call the last 10 years prior to retirement. Will the USS retirement be shipshape on the appointed day? Once you get into retirement, the big thing is how do I avoid running out of money before I run out of life? And finally, your legacy. Does you work what you worked hard for get to where you wanted it to after you're done with retirement? I can be reached at herwirefinancial.com. I do in-person Zoom and phone appointments. I am licensed and registered across several states and can easily add states if there's a need. If you'd like to schedule an appointment, click on the Schedule an Appointment button in the upper right-hand corner of my website. If you want to see more videos like this, go to my website and click on the YouTube channel button. It's the red one. If your friends want more information, they can follow me on Facebook, LinkedIn, or Twitter. If you prefer the good old-fashioned telephone, my phone number is 518-631-2569. Do not text that number. We'll both be sad as I will not get it. Opinions voiced in this material are for general information only, not intended to provide specific information or advice or recommendations for any individual. All performance reference is historical. No guarantee of future results. All indices are unmanaged and may not be invested in directly. All data is believed to be from reliable sources. However, no representation is made as to its completeness or accuracy. None of this is to be construed as tax, legal, ERISA, or investment advice. Consult your advisor prior to taking action. Unmanaged index returns do not reflect fees, expenses, or sales charges. Index performance is not indicative of the performance of any investment. Investing in stock includes numerous specific risks, including fluctuation of dividend, loss of principal, potential illiquidity of the investments in a falling market. Investing in mutual funds involves risk, including possible loss of principal. Fund value will fluctuate with market conditions and it may not achieve its investment objective. The Dow Jones Industrial Average is comprised of 30 stocks that are major factors in their industries and widely held by individuals and institutional investors. Standard & Poor's Index 500 Index is a capitalization weighted index of 500 stocks designed to measure performance of the broad domestic economy through changes in the aggregate market value of 500 stocks representing all major industries. The NASDAQ Composite Index measures all NASDAQ domestic and non-US based common stocks listed on the NASDAQ stock market. The market value, the last sale price multiplied by total shares outstanding, is calculated throughout the trading day and is related to the total value of the index. Everybody, it's Easter weekend. Have a great and blessed weekend and remember why this weekend exists. Have a blessed day. I'll see you next week.